Hey, hello, folks. Hope you all had a great weekend. My name is Eric Wilkinson, and this is Spotting the Trade. We're going to get you folks what you need to know before you roll, and that's going to be talking about economic data, how that impacts the overall markets with a little market analysis, maybe sprinkle in a little geopolitical fodder to round that all off, and then finally talk about some option strategies we could implement into a portfolio based on those assumptions we come up with in this market analysis. All right, so without further ado, let's get it on. I know you guys all are fired up for this week. We finally got a little bit of a bounce last week in the equities. Could it be the bottom? We're going to be talking about that today. Also, a lot of other geopolitical things going on. One thing is that is the House or is our government actually going to start talking about insider trading with these elected officials? Nancy Pelosi is in the spotlight. Her husband buying calls in Bitcoin ahead of the government giving a little credence to that product. Well, she's in hot water. But without all that said, that's something that should be done. These folks should not be able to invest ahead of any type of decision the government makes, as far as I'm concerned. So without further ado, not a whole lot of economic data here in the United States. It is a Monday. We don't get a whole lot, generally speaking, but we do have the National Association of Home Builders Index a little bit later on this afternoon. Rising interest rates, slowing housing markets. It's going to be interesting to see if those folks are still staying confident with that economic data point. Now, keep in mind, with that number, we are looking for it to come in around 66, which is in line with what we've been getting there. So we're going to be making sure that anything doesn't really drop too much. We don't want to see that number really drop below like 50 or anything like that. All right, so that's really the only data we get this week, today on economic data across the week. We do have a lot of Fed governors and some economic data that will give us direction. You know, we've been a little bit light Friday, though. We did get some economic data and it gave us a little bit of a boost to the upside. All right. So I think we'll see a little follow through from Friday into today and maybe even through the middle of the week here as follow through to the upside. Now, the rest of the markets, though, when we're looking at crude oil here, a little bit bearish on strong economic data, manufacturing. We're seeing some weakness there. A lot of that was due to Biden going to the Middle East and trying to get these folks to loosen their apron strings a little bit, maybe give us some oil, lower the prices here, free up some energy for the global economies here, lower that, slow down inflation. Well, doesn't sound like it went too well. You guys, if you remember, the reason why we had oil prices so low before was the expectation of future oil production here in the United States. Right now, yeah, folks are clamoring. We have the second highest production in our history. We are one of the leading oil producers globally right now. All of that stuff is true. The fact of the matter is, though, folks, is the future demand is still climbing and we have a finite supply. So it goes straight back to economy 101, guns and butters, or supply and demand. We have a steady supply, but the increasing demand is what is increasing prices there. We need to increase supply as well here in the United States to lower that overall prices and put the thumb screws on Saudi Arabia. That's the only way to do this and get through it. Right now, what are we seeing with energy prices? Well, they're probably going to start to continue to creep higher. Another thing we're seeing right now, as a matter of fact, here in Arizona, we had rolling thunder storms rolling through here all night long. So I don't think anybody in my house slept. People were walking around at 2 o'clock in the morning because it was so close. Now, what does that mean? Not really anything for the rest of the United States, other than the fact that we are in the summer the time where it's the dog days of summer. We're going to see some real heat starting to show up here. As a matter of fact, some folks, Oklahoma, Midwest, or out west, mid to out west, I should say, we're seeing really high weather right now, over 110, I think, somewhere in Oklahoma. Well, what does that do? Well, it's summertime, so we all turn on our air conditioning units, and we're starting to see these rolling blackouts. Not uncommon to see blackouts happen in the summertime when we see high spikes in energy. But what I want you folks to start thinking about is when we're talking about energy and we're talking about electricity and we're talking about automobiles and we're talking about plugging them into our houses, well, think about what that does to the grid. This grid is so fragile. It's been, constructed in the 30s, folks, and it is not ready for us to all plug in another air conditioning unit to our house. We're seeing these rolling blackouts right now without the demand for an extra car here in the United States. So what will that do to the grid? Well, we're going to see some massive rolling blackouts if that happens. As a matter of fact, they say if 1 in 3 people in your neighborhood has an electric car, that is going to really start exacerbating this blackout problem with the energy grid. That said, folks are still going to be pushing for that. I think that it's going to wane a little bit. We need to get the gasoline going here, United States. That's the only way to really lower energy prices, folks. Bonds, starting to finally see some weakness here. We've been talking about covered calls in the bonds. We're looking to do that in the ETFs to try and hedge our portfolio. That may be in a 401k. All of those different portfolios, folks, you need to look at them as holistically as possible. We can look to lower overall cost basis in those bonds by using ETFs. I show you how to do that in our webinar, so please check that out on lowering cost basis on our bond portfolio there, guys. Gold futures never finding any love here, despite the fact that we're seeing some inflation. Bitcoin getting a little bit of a boost here to the upside. If you guys are looking to play Bitcoin, this is a very volatile product. There are other products out there that you can use to simulate what is happening in Bitcoin. One of those is NVIDIA. We've been talking about that in the webinars, how we're trying to play Bitcoin by using NVIDIA, and it's working out quite nicely there. VIX coming off as we've been looking at the upside here. We've got the NASDAQ above that 50-day simple moving average. We talked about that. That was going to act as resistance. Now that we're above that, we're going to look for support there. And we're right along that trend channel that we drew out several months ago on this bearish move here. Still continuing to get lower lows, lower highs here, but we're not out of the woods yet. For the downside, it just looks like we're breaking it at this point. Follow through from this week is going to really be the determining factor, folks. I believe we are starting to grind out this bottom. It looks like it's not going to be one of those V-shaped recoveries that we've had in the past, but we are feeling like we are building out or grinding out this bottom. That is a very strong sign that the bulls are starting to take over here. I don't think we'll get one of those capitulation type of moments, at least not right now. It's not feeling like that with the economic data we're getting. That economic data starts turning for the worst, folks, then a capitulation moment is still possible. So right now we're just trying to grind out this bottom. I think folks are really starting to layer in some buys here. I don't think they're going full Monty where they're going and buying with both hands, but folks are starting to layer in some opportunities with selling some puts would be the opportune time to be doing something like that here. If there's opportunities out there that you are looking to add to your portfolio, this is probably the time to be selling some puts, because you're going to be able to get strike location well below where we have not even traded at this point in time. So you'll be able to roll out in and out of those puts there, play that game for a little while. That's what I'm looking to do. Dow Jones Industrial Average tagging that 50-day simple moving average overnight. Now, most day session folks will kind of discount that, but we already saw that the NASDAQ is above there. So that has to come into play here. We are testing this 50-day simple moving average. Keep your eyes on that. I wouldn't play it too many more times because we've already tested that once. I would not look to have it hold that as a strong point there in the Dow Jones Industrial Average. E-mini S&P is very short rally so far this morning. Everybody concentrating on the NASDAQ. That's going to give us a little bit of a clue, because that is a risk on trade when we're seeing the NASDAQ start to make these incremental move higher, right? When we saw them taking risk off, it was the first one to start to fall. Now we're starting to see that rebound happen in the NASDAQ as folks are looking for value in those stocks. So that giving us the key to this reversal off the bottom here in E-mini S&Ps, Dow Jones, And that is all because of what we're seeing there in the NASDAQ. Overnight inventory, very strong with the E-mini S&Ps. Not a whole lot of weakness other than I would say this is the longs, the weak hands starting to cover just before the open now. Open looks like it's going to be bullish to the upside. I don't see anything in the data that's going to give us anything to really worry about for the next day or so. But when we start getting into Wednesday, we're going to be starting to get some more economic data here in the United States, consumer confidence out of Europe, existing home sales, things like that are going to be key drivers of this market because it's telling us how strong the consumer is feeling about this economy. And that's what is going to be key moving forward. We're already starting to see the consumer pull back in certain areas of purchasing on extra ancillary things that we wouldn't normally buy for ourselves. Those things are the first to go, and that's what we're starting to see. Desserts, maybe the appetizers at your diner, going out to Starbucks. Maybe you're not buying that extra muffin or something like that. You're not going and spending that extra money at the bar or something. You know, that money is being saved or being put into the gas tank right now. That's not the best scenario for an economy, because when we all start spending our money the same way, that money all goes to the same place. That does not create velocity of money. And that's what we want to avoid going forward here in 2020. All right. Lowering gas prices is the key to that mandate, though. All right. Otherwise, looking for covering some of those puts that we've been selling as of recently on this bounce, that would be the opportune time. We're not looking to take the full credit from selling those puts. I'd be looking at 50, maybe 75% of what we collected as a credit to cover. So say, for instance, you sold it for $1, you're getting out for 50 cents or 25 cents. You've already gotten the most you can get out of that. The rest will be a long, slow road to get the rest of that premium. Look to just reallocate on a sell-off if we get that. All right. So that's what we're working on today. If you can't take that, take it easy. Bye for now.